Good morning, everybody. It's the 15th of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, gentlemen.
Morning, lads.
All good?
All good in the hood.
Good news.
Yeah, nice to see the south is getting a bit what the north gets.
Yeah, getting it right up it with a load of COVID.
Yeah, there's loads of northern parties yesterday all celebrating because
The south are getting absolutely fucked.
South were going into tier 3. I think it's going to be like what's that film? You can take my freedom. You know,
Braveheart, is it?
Yeah, Braveheart. Yeah, I think it'll be
Well,
the north-south divide is going to be strong.
We've all avoided it pretty much in the south for a number of months, and now it's just coming to smash us up for Christmas. So
yeah, we think the Northerners have mutated it, and they've made a southern softy one, and it just spreads like wildfire.
It spreads like mad.
Yeah. So news out yesterday, London moving into the highest level of COVID-19 restrictions under the UK's lockdown rules after a massive surge in cases. The south, as we've just touched upon, appears now to be totally riddled with COVID. According to Matt Hancock yesterday, it is a variation of the original strain of COVID-19, but has said that it shouldn't impact the effectiveness of the vaccine, which continues to be rolled out. Doctor surgeries have now got that in the around the country and will be administering it. You know what I mean? Administering it.
Yeah, giving it to people.
Giving it to people. That's what I should have said. Yeah, so all good on that front. But yeah, it looks like we're in for a pretty sad Christmas if families can't get together because they're all isolating or shielding.
Or a happy Christmas. Could be
a happy Christmas. Yeah, I mean, there might be a lot less family arguments and disputes as a result.
Yeah, could bring everyone closer together in the long run.
Won't need turkeys. You could just have a chicken, and therefore that won't be as costly, and will probably be a bit more moist as well.
Yeah. Oh, you're a vegetarian household.
Yeah, I know.
You've got a nut roast anyway.
Yeah, we got a corn roast for Christmas. So
get out of here.
I've got the biggest turkey that I can carry.
Disgusting. I nearly threw up in my mouth then.
There's only 4 of us. So I've got turkey for 10.
Nice. You're going to be feasting on that for days.
Oh, I love it. Turkey curry, turkey pasta.
Oh, yeah. Lovely. When I did like me, that was good. No breakthrough in the Brexit talks, as we are, all pretty aware of now. Didn't arrive over the weekend, didn't come yesterday. Suggestions that a new deal could be done this week. We all know that's a lie.
Barney said that, didn't he? As well.
Yeah. Bored. So bored. Anything else going on in the news that we need to be aware of before we get into some charts? Anything you've seen?
No, I just think the markets are maybe waking up to a bit of a harsher lockdown across the world, basically.
Equity markets don't look like that this morning.
No, equity markets are a reverse swing indicator.
It's all about
timing. I think that I've got quite a nice reversal pattern on DAX, so I'll talk about that in a minute if you like.
All right. Well, do you want to go first, or Steve? Do you want to have a?
Yeah, I'll let.
Oh, he's going to see what I say first now, isn't he?
Yeah, go on then, Steve. Yeah. Over to you.
What did you say? Reversal pattern. I'll just run through the main indices. European side, we've got this signs of exhaustion and. With the indecisive week we had last week, and we're forming a bit of a hanging man candle, but we're only early in the week, so plenty of time to go for the FTSE to save itself. But over the last few days, obviously, we've seen this evening doji star, evening star formation forming, so a little bit of pressure on the indices. A little bit of a pickup this morning, though. Overnight we had the sell-off, and we've had a really nice reversal candle in the last hour across all these indices, but it's heading up towards trend resistance and obviously cloud resistance a little bit higher in the 65.58 to 65.75 level on the FTSE. DAX has had a pullback. We had this potential reversed head and shoulders before, which failed, and you probably can see that we've got the potential of another one forming here. But the real short-term levels to watch are around about the 13,300 area. I think if we get a break of 13,313, Remember that
He
level.
loves that.
That's the
Yes,
level
that's
in DAX.
all over that.
Yeah, a break of there, and we should see, like we did last time here, you can see how well this level has acted in the past, 13,318 there. So it's just poked its head through 30,326 there, and then when it does go through, it explodes, and when it comes back with a bump. So yeah, this testing area around in the DAX today. So obviously the last couple of hours we've had a nice reversal, so positive in the European index again, the CAC, the French 40 doing the same. On the US front, we've seen the same sort of move in the last few hours, all positive. These are all hourly charts. But you know, so it looks like we're going to get this positive move in the morning. But then who knows what happens in the afternoon? You know, everything's been quite impacted. Just pop across to. I'll let Ian talk about his idea in the DAX.
Classic gold yesterday, Steve. That flush of the stops and then an absolute fuck you to everybody.
Yeah. It's the level we were talking about, 1822 level, flushed out stops down to 1819, and then a rally back, and looking, I think on the day yesterday it probably closed. I probably closed about unchanged, flat, maybe. Yeah. But still, I mean, this is sort of like moving in line with the indices at the moment, the gold, which is sometimes unusual, but we got the level here to watch really this morning is this 1850 level. That is a line in the sand as far as, or a pivotal level. If we smash through there, then we'll get that stop flush, and whether it can be maintained, I don't know. Gold feels a little bit heavy still. That's again on the hourly chart.
What point do you abandon the head and shoulders on that, Steve?
On the hourly chart, I would say that the head and shoulders is really, I mean, the whole head and shoulder pattern would be abandoned only on a break of the high. That would take out the high. This could be a complex pattern. So if we go back, we can see a left shoulder here. We can also say this was potentially a left shoulder. So there's two left shoulders. We've got right shoulder here, right shoulder here, right shoulder here. It's a complex head and shoulders pattern. So a clear break of this right shoulder, and then we would maybe, well, obviously you shouldn't be trading the pattern until it breaks and closes below the neckline anyway. So, but I would still be considering this pattern until we get a clear break of this, the high 1875. This could still play out, and then when it does break, we'll see a real proper flush then, and no holding back. So, yeah, I'll pass over to Ian, and he can talk about his DAX.
Cheers, Steve.
Cheers, mate. I just want to cover these. They're not quite there yet, but there's some decent zones to the upside. So this is US 30, which is the Dow Jones, and we've got a confluence area here, which is around about 306, 307.70, which will form a pattern. I don't know which one it is. I can't be bothered to look at the moment. And then potentially move lower. So just put in there zone as a potential sell zone. The US 500, which is the S&P, it did virtually make it, so I don't know whether or not he's just going to get another move to the upside. This one is a butterfly, so again, it's just limited buying, but a fair amount from current levels, and we've closed these gaps that we saw over the weekend. FTSE, I've got something a lot higher up. It's not FTSE, Nasdaq. It's at around about 1300 to the upside. But I thought this was quite interesting this morning, which was the DAX. And it was the weekly chart that caught me really, because we got this bearish outside candle from last week, and they often indicate the top of a trend and the start of a new downward bias. I mean, it's a fair amount of indecision. You've got a doji style candle there, and then not exactly a deep body, and we have got spikes in both directions, so it's not the best of candles. But then looking at this morning, I'm just wondering if this is going to hold. It rejected 61.8% or close to it, so you've then got a zone here which is 133.81, 133.64, which will form a Gartley pattern and again sort of stop above 88.6, and because if it gets above there it's invalidated anyway, but there's a potential sell zone here. And it's strange that I think the stocks are moving to the upside this morning, because the risk assets with regards to, or risk currencies that I should say, are starting to move higher, which means the stocks should move lower. So this is the dollar index, got a really good impulsive move to the upside. Again, this was something that we talked about yesterday, staying within this sort of range. I'm wondering now whether or not we're going to make a head and shoulders pattern. We've got FOMC tomorrow, so are we just going to consolidate in this range, selling rallies and then buying dips into FOMC, and then maybe taking off? But a really decent bullish outside candle from sort of midday yesterday, and I think if you go down to shorter time frames, this is just looking a bit like a flag, or even if we do reverse lower, or correct lower I should say, because I don't think it's going to be a reversal now, there's some sort of flag formation on these shorter time frames. And again, looking at bigger time frames, so we've got this 261.8% fib here on the daily chart, which we keep on talking about. It needs to break up, and outside candles, this is the weekly chart. So if you note the weekly chart, it needs to get above 91.25 by the close of the week to then form a bullish outside candle on the weekly chart, and give this correction a chance of extending, basically. So I think, again, as we always say, you probably need a bit of a news catalyst. I thought it might be this new strain, or it could be FOMC. So sort of reflecting that back on majors, I still like this zone on the weekly chart. I've got this confluence zone here at 121.50, 121.55, and last week was a doji. We're starting the week pretty crap, really. No real direction, but I still think that the bias can break to the downside, but it's going to be all about that dollar index. This was our trade of the day yesterday, got stopped out by 7 ticks, and that started coming lower. I think that's going to get closed, the gap, which is around about 132.30. Maybe not today, but again, looking at the weekly chart, we've got a perfected confluence zone here at 135.50. So a lot of the dollar majors, I must sound like a broken record every morning, are looking like they've stalled at least, and this is probably the favoured one at the moment, even though I don't really normally like dollar Swiss because they're both risk assets. But you've got a perfected zone here, 88.65. You go to the daily chart, you've got 261.8% at 88.56. You go to this chart, you got an ending wedge pattern close to a 261.8% extension. So if it can break out, which is at 88, then the measured move target's up here at 90.10. Dollar yen, can't really get much of a feel on dollar yen. I think the main play for that is to buy into dips around about 102.50, but we're miles away from there at the moment. I can't get much on an intraday chart. I mean, this is looking a little bit like a flag formation. So again, sort of buying dips, maybe towards this mild swing low from yesterday afternoon. Dollar CAD, and again, is showing a few signs that it could build some upside bias, but these big fibs aren't till lower levels, so 125.32, 125.21, and we're only trading at 127.60. But on a short-term basis, if it can break this looking like an ascending triangle formation, then I think the immediate bias will be to the upside. Aussie dollar's quite nice risk asset. And talking about how powerful outside buyers can be, so 8-hour chart yesterday at a butterfly completion, we've got a bearish outside candle. 4-hour chart, we've got a bearish outside candle. And the prime level there, I've got an alarm on there. A prime level for a short entry is there at 76.10. So it's not a million miles off, and that's a monthly resistance level. So taking it down to a 4-hour chart, that's not too shabby, really. So I think out of all of them, it's looking like maybe a small free wave correction just to start making lower lows and lower highs. But I think with regards to Aussie dollar, I think a top might be in place. And again, even on the 1 hour chart, you've got a bearish outside candle that shows sort of how powerful they are. And that's, again, making me think about indices and whether or not they've topped out, because Aussie dollar will be not the beneficiary, but if indices come off, then Aussie dollar should be quite aggressive. Euro sterling, mentioned this yesterday, this gap. Again, I think if you can get something near the gap close, it's worth a sell, only because you've got a few different time frames highlighting cipher patterns. And then euro yen, this is still pretty stuck, really. We've had, I think it's 9 days now where it's traded sideways, and this is when you need to sort of, but it's at a decent level. That's at an 88.6% pullback level, and it's at these points where you need to break into your shorter time frames. And I caught this one personally myself yesterday, which was again quite a nice little Gartley at 126.50, and that with that 88.6% and the view on risk off, I think could be a top in formation for euro yen. That's me done on majors.
Thanks, Ian. As comprehensive as always. Lead us on to the gun to the head trades from yesterday. As you mentioned, you were unlucky with that cable trade that you had. This is where we're at. These are the trades from yesterday. We had sterling New Zealand dollar as well, which was looking for a gap fill. Didn't quite get there. Still sort of bumbling around a little bit. New Zealand dollar quite weak this morning, actually, so that's not helping. But obviously at 9 o'clock, we closed the trade. It was 0.46R on side. Steve, as you mentioned, you were flat on gold, half a tick to the good. Not fabulous, but we'll take any win we can get at the minute, and that goes down on the win column. Still not great overall. The decline continues. We need some sort of catalyst, really, I think, for some follow through in these markets, and we're just not getting it. So we will persist anyway, probably stupidly, but we've got to keep going because that's what we've been doing for the last 277 episodes. Who's got one ready?
I'm going to take that euro yen.
Go on in.
And hope that top stays in place. Plus talking my own book. So it's normally 127.2% of the formation is the target level. And I'll put it above the swing high there. So I'll go for a risky, it's moving. I'll take those. 126.42. So I'm short 126.42, 126.58 stop with a target at 125.50, giving me 5.6R.
Boom. Steve, you got one ready?
Yeah, I'm going to go for gold. I'm going to sell into this right shoulder potential. This is my third go at it in a row. Selling at 18.46. The stop is going to be really tight, 18.51. So it's only $5 stop. The target is going to stay around about the measured move target 17.76. So a nice 14-1.
Oh yeah, we can do with that.
Would you back a 14-1 horse?
Yeah.
Probably not.
Yes, I would.
They're
the only ones. They're the only ones that do back.
Grand National, maybe, but that's it. There's a lot of fences to jump.
You never know. You've got to be in it to win it. Let's see what happens. If that comes in, then all our woes will be behind us. Yeah. I'm going to take a look at something equally speculative. Obviously, we've seen a fairly substantial rally over the last hour in equities. Looking at the DAX, it was approaching this resistance here at 13,300 or 13,295. We've burst above it. I'm just going to take a wild punt that that's not going to hold, and we're going to see some sort of retracement. So going to sell it here at 13,307. I'm going to put a stop loss at 13,345. Going to target a move down to these swing lows that we saw on the 11th at 13,010, let's say. Some wildly speculative trades this morning, but they could play out. You never know. 7.8.
Let's hope so. Let's hope that Santa comes early.
Yes, that would be nice. Okay, well, that's the 3 trades for today then. Best of luck, gents. In terms of news and high impact data today, we have US Empire State Manufacturing Index, which is due to rise to 7.4 from 6.3. That's due out at 1:30. After that, we've got Australian PMIs not until 10 p.m. tonight. Services to fall to 54.7 and manufacturing to edge down to 55.87. Anything else on the calendar, Ian, that we should be keeping an eye out for today?
Not really. I think it's all about tomorrow, isn't it? We've got a barrage of figures tomorrow.
So just give us a quick heads up. We've got FOMC.
We've got 7 a.m. We've got UK CPI inflation figure. Then we've got Eurozone or Germany PMI, and then we've got Eurozone PMI, UK PMI. Then we've got US retail sales, and then we've got inflationary figures out of Canada.
So, all happening then.
Yeah, and then we've got Swiss National Bank bulletin as well.
Wow.
So it's a busy old. I mean, look at this is today's. We've not a lot of red on the board, and then you go in tomorrow and it's just red and orange. It's a barrage of figures.
Plenty to keep an eye out for tomorrow then. Okay, well, I think that's pretty much all from us today. Let's wrap it up there. Good luck with your trades. Hopefully we can bag a decent winner, and we will be back tomorrow morning.
Indeedy. Good luck.
Have a good one. Bye-bye.
Cheers.